Understanding rollovers and transfers. What's the difference? When you're moving money between retirement accounts, the type of transaction you choose can have a significant impact on taxes, timing, and your overall strategy. Stay tuned after this quick disclaimer as we go over rollovers and transfers. What's the difference? So we're going to go ahead and cover the three distinct ways to move funds between retirement accounts. That is a transfer, an indirect rollover, or a direct rollover. So first of all, let's talk about number one, the indirect rollover. A lot of people are familiar with this. It's also called a 60-day rollover because you only have 60 days from start to finish from the time you receive those funds to get those into another tax advantage retirement account. And if you don't meet that deadline, you can have taxes, penalties, and be unable to then put that back into your account and be stuck with it, basically. So it's very, very important to watch out for that 60-day window. So how it works. With an indirect rollover, you receive a distribution, typically a check from your current retirement account, like a 401k or an existing IRA. It's your responsibility to make sure that those funds are deposited within that 60-day window. So important things to watch out for. Of course, number one is that strict deadline. If you don't redeposit that full amount into another IRA within 60 days, the IRS considers it a withdrawal, a distribution to you. That means it's subject to taxes and a 10% early withdrawal penalty, especially if you're under the age of 59 and a half. Next would be tax withholding. Employer-sponsored plans like 401ks are required to withhold 20% federal taxes. That means if you want to roll over the full amount, you'll need to come up with the withheld portion from another source. So that can be a problem for many people. And then, of course, there's the one rollover rule. You can only do one 60-day rollover in a 12-month period. And that limit applies to all of your IRAs combined. So if you have an IRA over here and an IRA over here, and you do a 60-day rollover from this one to a new account so that you can self-direct, or you just want a new provider, you cannot then move funds from any other account or even the same account for another 12 months. So if you tried to do that and took another distribution, you would not be able to put that back into another IRA. So very important. Now, what is this best for? In some cases, this does work for people. If you're in a situation where you briefly need access to funds, this can benefit you, but you have to be cautious and pay attention to that deadline because those funds have to go back within that 60-day window. Next, we're going to talk about a direct rollover. So a direct rollover, your funds move directly from the retirement plan, like a 401k, into an IRA, and you never take possession of the funds. So when you're talking to your 401k company, what you tell them is, I need to do a distribution for a direct rollover. Then they understand that that is going directly to another IRA, and they do not have to withhold that 20% for taxes. So why is it safer? The check is made out to the receiving IRA custodian for your benefit An example would be Mountain West IRA FBO, which is for benefit of your name IRA. So instead of saying John Smith in the who the check is payable to, it's going to say Mountain West IRA FBO John Smith, comma IRA. And then they know that that is going to go right into your new IRA or into an existing IRA, and they do not have to withhold those taxes. Of course, because they're not withholding taxes, you're not taking personal possession of the funds. You don't have to worry about that 10% early withdrawal penalty if you're under 59 and a half, because you never touch the funds. And again, that is the very important part of this piece. You don't touch the funds. So basically what you're looking at is that you're going to get a distribution from your 401k. So at tax time, you're going to get a 1099 saying you took this distribution. And then those funds are going to go directly into your IRA. Now, shortly after tax time, you're going to get a 5498 that says, hey, those funds went kit and caboodle into the new IRA. There are no taxes, there are no penalties, and it's a wash. So this is a tax reportable event, just like a 60-day rollover, but it's much easier to deal with because you don't have to come up with that extra 20% to put in. So this is best for moving funds from an employer plan to an IRA cleanly, efficiently, and without any tax implications or headaches. So here's a fun fact. Have you checked all your old employers to make sure that you don't have orphaned 401ks from like a previous job? It's amazing how many people leave their job, go do a new job, and completely forget or just don't know what to do with their old 401k. You can gather up those orphan 401ks and do a direct rollover into an IRA so that those funds are all put together, and then you can invest with them. So important tip to keep an eye on those old 401ks. Now let's talk about an IRA-to-IRA transfer. This is a direct trustee to trustee transfer. It's not a tax reportable event. It doesn't begin life as a distribution. It is simply a transfer from one IRA to another IRA of the same type. So pre-tax to pre-tax, Roth to Roth. It is very much the safest way to do it. Again, you're not taking possession of those funds. And if a transfer is going to work for you, it is a pretty safe option and easier for you because, again, you don't have that tax reporting. So why is it considered by many to be the safest option? Because no taxes are withheld. You don't have to come up with that extra 20%. There's no 60-day deadline to worry about, and it's unlimited. So if you need to move funds from many IRAs or move some funds over now to do something, and then you want to move some more funds over later to add additional funds to your investment, you can do that. Transfers are unlimited. It is really the most commonly used form of moving funds between IRAs. We do transfers all day long in both directions. So we're very, very familiar with transfers. At the time this blog is being posted, Mountain West IRA is offering free incoming wire transfer fees for any incoming wire 25,000 or over. So that's pretty cool too. You can get your funds very quickly with a wire. Rollovers are usually done with a check because that's the way 401ks tend to work with those and pension plans and things like that. But IRAs, you can get a wire and you don't have to worry about waiting for that check to come through the mail. You don't have to worry about that 5-day check hold once the funds finally get there. With a wire, the funds arrive often much quicker because they're not going through the mail. And then they are available the very next day to do your investment. This is really good if you're doing something where you have a closing that's upcoming pretty quick, or something where you really have to move fast and you need those funds to get over as quickly as possible. So what is a transfer best for? It's best for consolidating IRAs or changing custodians without triggering taxes or penalties. So that's basically it in a nutshell. We do our best to transfer this as fast as possible. So just as a reminder, we do our best to transfer as fast as possible. However, we are still dependent on the sending custodian's time frame, and how long it takes them to process things. We may even ask you for help to contact them to speed up the process because they tend to listen to their clients. To wrap it up, choosing the right method to move your retirement funds is critical to maintaining tax-advantaged growth and avoiding unnecessary penalties. Always consider consulting a qualified tax advisor or retirement specialist to ensure your rollover or transfer strategy aligns with your financial goals. So, are you ready to take control of your retirement strategy? At Mountain West IRA, we specialize in self-directed IRAs that give you the power to invest beyond the stock market, beyond stocks, bonds, mutual funds, CDs, things like that. You can do real estate, private notes, precious metals, cryptocurrency, and so very much more. Whether you're considering a traditional or a Roth IRA, we can help you understand your options and answer any questions you may have. So feel free to call us at 866-377-3311 or schedule a free consultation. The link is in the description, or you can go to mountainwestira.com. Call us today to get started. Thank you so much, and you have a great day.